Welcome to Sweet Life Beat Life. We hope this video helps.
In this video, I will explain how to file a Schedule E. First, understand that Schedule E is used to report income or loss from rental real estate, royalties, partnerships, S-corporations, estates, and trusts. You'll need to gather all relevant income and expense documents, such as Form 1099 MISC for royalties or detailed rental ledgers. This form helps determine your net income or loss from these activities, which then flows to your main tax return. When reporting rental income, list all gross rents collected from your tenants. Then, you can deduct various expenses directly related to your rental property. These include mortgage interest, real estate taxes, insurance premiums, repairs, and depreciation. Be aware of passive activity loss rules, which might limit how much loss you can deduct if you don't materially participate in the rental activity. Keep meticulous records for all transactions. Schedule E also covers income and losses from partnerships and S-corporations, typically reported to you on a Schedule K-1. You'll also report royalty income, whether from oil and gas leases or intellectual property like books or music. Remember to deduct any ordinary and necessary expenses associated with generating this royalty income. This ensures your taxable income accurately reflects your net earnings from these diverse sources. Before finalizing, meticulously review every line of your Schedule E for accuracy. Double-check all income figures and expense deductions to avoid errors that could lead to issues. The net income or loss calculated on Schedule E will then transfer directly to your Form 1040, impacting your overall tax liability. For more helpful tips and deals, including a link to grab some Little Trees black ice for your car, check out the description below this video. It's always a good idea to consult a tax professional for complex situations.
Thanks for watching. Consider subscribing if we helped you.